The world has been rattled by an epoch-making crisis, which has caused significant harm, shuttered businesses, put livelihoods at risk, and protectionist reactions have cast doubts about the future of globalization. As we start rebuilding, we need to seize this opportunity to build a better tomorrow, one which achieves a more balanced, fair, and ultimately a more sustainable world. Globalization has helped raise living standards around the world in recent decades, and will continue to be vital for the future. Finance will continue to play a central role in international business. Making sure capital is available when needed will be crucial in shaping the global post-COVID economic recovery. Investors will provide the funds required to help companies around the world stimulate growth and create jobs. They will also help bring about the transition of our economies to a more sustainable future. Luxembourg will play its part. Our unique expertise in international finance connects investors with projects. Our ecosystem, our toolbox of investment vehicles, and our stability offer an ideal platform for financial services to operate on a worldwide scale. Luxembourg contributes to building a better, stronger, more open, and more sustainable tomorrow.
Welcome to Building Bridges, bringing together financial industry experts from different horizons, sharing and discussing their insights.
A warm welcome to today's program, Building Bridges with the United Kingdom. Luxembourg for Finance has started this year with not only a modernized new look, corporate look, our new logo, but also we have decided to rebrand our digital conferences dedicated to geographic markets into Building Bridges. And what better country to start this new set of conferences with than the United Kingdom? Indeed, as all of you will know, Luxembourg has grown in a symbiotic relationship with our friends in the United Kingdom and in London in particular. And an event, Brexit, has decided that the markets will be split. And today, economic operators have to look at it from a different perspective. And that is what we are going to do here. I can reassure you, it is not the umpteenth Brexit conference we have intended to do, but rather look beyond. Where do we go from here? How do economic operators, and in particular financial institutions, look at the opportunities that both sides of the channel offer as a market? And to do this morning, we have brought together a range of speakers from different parts of the financial industry. Asset management, which of course is the flagship of Luxembourg's financial industry, but also insurance, as well as the payment industry. To start our program, I am very happy to be able to welcome Kerstin Mathias. Kerstin is the Regulatory Affairs and Policy Director at the City of London Corporation. She leads the city's policy, EU and UK policy work, as well as work on global trade and sustainable finance. Before handing over to her, let me also thank our sponsors who again have very generously supported us in this endeavor. And I would like to in particular thank all of them for this kind contribution that allows us to improve the quality of our programs. But now, ladies and gentlemen, let me hand over to Kerstin Mathias, who will give us an overview of the different reforms that are currently ongoing in the United Kingdom. Obviously, all of us know that regulatory divergence is inevitable on both sides of the channel, in the UK as well as in the EU. And what we are trying to do is give you a better understanding of what is happening on both sides so that you can look at where you want to, how you want to position yourself in order to be able to seize the opportunities that either market offers you. And with this, Kerstin, the floor is yours.
Thank you very much for the introduction, and good morning to all of those listening into this event today. Thank you also to Luxembourg for Finance for inviting me today and bringing us all together to discuss this very important topic. Nicolas has given me one challenge today, which is to try and not use the B word. So I will try and rise to that challenge. And I would like to give everyone else participating in today's discussion another challenge, which is to not use the term divergence, but rather think about it as parallel evolution, as both the UK, but also the EU's regime adapt to new and emerging challenges. So really, the UK's financial services reform agenda is probably just as busy, if not a little more, than the EU's, because, as I've just said, both of our regimes are evolving, and as they do that, it's really important that we keep the dialogue going. A healthy EU-UK exchange is really key for us in the city, not just for financial services, but also for the wider economy. We both have a number of key shared challenges and agendas, such as tackling climate change and responding to the increasing digitization of our economy. It has been said many, many times before, but it really is true. Given the geographic closeness that we share, the currently almost identical rule books, and the strong cultural ties, we are ideally placed to work together and identify opportunities today and going forward to do that. So it is really right that the event today focuses on what unites us and that we aim to build bridges, as the event title suggests. So I have been given just under 20 minutes to set out some of the key UK financial services reforms. And as you can see on my first slide, I will try to talk through them in six key themes in an attempt to just summarize the wealth of issues that are currently happening and give you a better idea of the direction of travel. Because it's really that question around the direction of travel and the vision, the UK government's vision for a UK-based financial services, that is probably the question that we're being asked about most frequently in our EU engagement, along potentially with the concern that we might have plans to pursue a radical deregulatory agenda. So let me start with that first question about the vision. When being asked about this, I usually point colleagues and friends in the EU and globally to the Chancellor's Mansion House speech from the 1st of July and subsequent updates to that vision. In that, he has set out 4 key themes that would drive and really shape the UK's financial services agenda going forward. The first one is openness. We see this as one of the UK's key strengths, and our ability to be an open and global financial hub is something that we absolutely want to keep going forward. So what's included under this theme? It's a strong commitment to international standards, working with those institutions and strengthening the relevant frameworks wherever we can, continue to deepen our ties internationally and engage in meaningful dialogue, both for the public and also the private sector. And again, we would particularly like to do this with deep and established financial markets, such as in the US, Japan, Singapore, but of course, also the EU. The next theme is competitiveness. And here the ambition is really to look at what the UK can do to attract investment that will support and encourage growth. So some of the key initiatives that you will have heard about here and that I will also touch on briefly later today is Lord Hill's listings review, it's the wholesale markets review, it's the future regulatory framework review, but also the government's review of the UK funds regime. The third theme is an ambition for the UK to be at the forefront of technology and innovation. Again, a key initiative here is the so-called Khalifa review of UK fintech. I will touch on this later. as well, but it also includes initiatives on bringing crypto assets into the financial promotion regulation, work on stable coins and central bank digital currencies. And then last but certainly not least, there's also sustainable finance. And here it's the UK's ambition to really be the world leader in sustainable finance. And you will know that the UK is committed to be the world's first net zero aligned financial center. The Treasury has published a relevant roadmap, which again I'll speak about in a second. So there's some key and important initiatives here. And again, I know that all of these issues are also priorities for the EU, and there's lots that we can learn from each other. So then starting with the first deep dive for my presentation today, the future regulatory framework review. You might ask, why am I talking about this? But for us in the UK, it's one of the key consequences of our departure from the EU. The audience today will know this much better than most, but the vast majority of the UK's financial framework before its departure from the EU flowed directly from the EU. That system was complex, but it was also a really well-oiled policy-making machine. We are now no longer part of that system. So we need to think very carefully what that means for the roles of our different UK-based players, and make sure that we balance independency with the right accountability and scrutiny frameworks. We expect the UK government to legislate for all of this in the Financial Services Bill in the second half of this year. So what are some of the key reforms that are being proposed under this so-called Future Regulatory Framework Review? You will see 5 that are set out on this slide. In the interest of time, I'll focus on 3 only. So the first is the so-called growth and competitiveness objective. This is the idea to add a secondary objective to the PRA and also the FCA for them to facilitate the long-term growth of international competitiveness of the UK economy, including in the financial services sector. We do absolutely not see this proposal as an attempt for a race to the bottom, but rather it should enable our regulators to take account of wider factors such as sustainable growth that would benefit our ambition to encourage innovation and focus on sustainable finance. This leads me neatly on to the secondary reform around sustainable growth. And here, the FCA currently has regard to the desirability of sustainable growth in the economy of the UK in the medium or long term. The government proposes to amend this to make clear that the sustainable growth is consistent with the government's commitment to achieve net zero by 2050. Again, we are very supportive of this proposal. And then finally, the move of retained EU law to the regulator's rulebook is another really important task. This will be a multi-year process, which we just now have to go through, and that will take time. And I hope you'll bear with us as we do that. But one thing that's incredibly important for the sector in the UK is that we ensure there's sufficient democratic accountability and scrutiny of financial regulation. And this is not for Parliament to really set the detailed rules, but to really make sure there is sufficient oversight, for instance, from the Treasury Select Committee to scrutinize the regulator's significant new powers. So then moving on to the next theme on sustainable finance, the UK strategy, Greening Finance, a Roadmap for Sustainable Investment, was published in October 2021. Some of you might have seen it. It outlines key legislative and regulatory changes that the UK is looking to make here. The roadmap proposes 3 phases to greening the UK's financial system, and it of course takes into account work that has previously been done on this. The aim really of the overall measures that are being set out is to enable investors and businesses to have the information they need to understand environmental risks that they face and create. And I know that this is a goal that we share with many other jurisdictions, including, of course, the EU. So I will now set out a little bit more detail on some of the key initiatives that form part of this phase one. The first is sustainability disclosure requirements. And this is really absolutely critical to this first phase of the approach. So these requirements will bring together new and existing sustainability reporting requirements for businesses, the financial sector, and also investment products. It will allow sustainability information to flow from companies in the real economy to the financial sector. In 2021, the FCA published a discussion paper which proposed a product classification, labeling, and a disclosure regime. It is worth noting that this differs from the EU's rules, as it looks to build on the FCA's TCFD work, but also the work of international standards such as the IFRS and IOSCO. The scope of the SDR tries to capture the majority of UK asset managers, asset owners, as well as their products, regardless of whether they have ESG aims or not. However, the FCA have asked whether certain types of products should be excluded from the labeling regime, e.g., for instance, separate accounts or more broadly products that are not targeted to retail investors. And the FCA is currently also exploring what rules should be introduced for UK financial advisors. Second important theme, TCFD. Here, the roadmap proposes to build on the UK's implementation of mandatory reporting under the TCFD framework and recommendations by 2025. The proposals require asset managers and asset owners of investment products to substantiate how ESG-related matters will be accounted for in governance, investment policies, and also strategies. And the roadmap will also require disclosures against minimum safeguards, which will promote sustainable investment. Thirdly, the UK green taxonomy, which again is a topic of frequent discussion between us and our EU friends and counterparts, because this is, of course, an area where the EU has done a lot of great work already. So here the UK government has established something called the Green Technical Advisory Group, GTAC in short, and it has mandated GTAC to advise the UK government on how to adopt the EU taxonomy for UK purposes. The roadmap sets out the high-level objectives and approach for the UK's green taxonomy, and it is really notable that in principle, the approach will be the same as the EU's for taxonomy alignment. And then finally, ESG ratings. Here, in the summer of last year, the FCA published a consultation paper on enhancing climate-related disclosures. The paper addressed the role of ESG data and data providers and identified some of the possible policy issues from the FCA's perspective for ESG rating providers. The City of London, as part of our Works Re International Regulatory Strategy Group, actually published a major paper on this just earlier this week, and we'd be happy to share that with anyone of interest after this event. So then moving on to the next theme, technology and innovation, and the key initiative I want to talk about here is the Khalifa Review. So the Khalifa Review was an independent review to identify priority areas to support the growth of the UK's fintech sector. It looked at four key themes, and I'll pick out just one recommendation under each of those to give a little bit more color on what it was trying to do. So on policy and recommendation, there was policy and regulation. There was a recommendation to implement something called the Scale Box, which the FCA is implementing at the moment. And this really builds on the work of the Sandbox and aims to provide additional support at the growth stage of fintechs. Under skills and talent, the UK government has accepted the proposal to set up a scale-up visa. So this is a new fast-track visa system for tech scale-ups, growing 20% a year in headcount or revenue, and this will launch later this year. On investment, the recommendations are very well aligned with Lord Hill's review, and again, there were proposals around enhanced governance rights and dual-class share structures, which all have been permitted now as part of the FCA's changes to the listings review. And finally, there are plans to set up a new body called CFIT, the Center for Innovation, Finance and Technology, and its aim is to strengthen the national coordination of what we're doing to support growth across the fintech ecosystem. Of course, there are also wider business environment considerations, which I know are of great importance to the financial services community based in the UK and abroad. The two key themes I'm looking at here are tax and access to talent. So on tax, while we're seeing positive movement on the banking surcharge debate, where we'll see a reduction from 8% to 3%, taking effect on the 1st of April in 2023. Elsewhere, we're seeing tax rises, including on corporate tax, which will go up from 19% to 25%, and also the introduction of a health and social care levy at 1.25%. On access to talent, of course, we all know that the end of freedom of movement had a huge impact on the amount of EU talent in the UK, and to some extent also in our perception as a center that welcomes talent. But we're working really hard to make some positive changes here, such as the suspension of the cap on skilled workers, improved, more user-friendly communication, but also a better end-to-end system for the application. We'll also see the launch of some new routes in 2022. I already mentioned the scale-up visa. There'll be a new global business mobility route. So these are all really important and positive changes, which I hope you'll welcome. And then finally, there will definitely be further changes coming up on this too, and we continue to prioritize this work because we want to make sure that the important message that financial services has and will always continue to be an international industry, including in the UK and in the city, reaches the right people. So then some further reforms, which I haven't really had a chance to talk about yet, and I won't really be able to in my remaining 3 minutes, but I would be remiss to not even mention them, even if just briefly. So on Solvency II, the reason why I picked this one is because I really do think this is an area where the EU and the UK are aligned in what they're trying to achieve. There is a shared ambition to free up capital for long-term investment by insurers. And I know both jurisdictions are looking at that, and it's a fantastic opportunity for us to share our thinking as we do that. On the wholesale markets review, I mean, again, the reason why I wanted to briefly touch on this is just to remind everyone that, of course, here the UK is not starting from a blank sheet of paper. There are certain aspects where we will continue to have completely aligned EU and UK frameworks. And again, the UK and the EU are looking to address very similar issues: adequacy of transparency requirements, different methods of executions, the availability of market data, and so on. So another really important area for us to collaborate on. And then finally, Lord Hill's listings review, where all of the recommendations have been implemented. I'm sure you will have heard about them. You know, 3 key ones: the liberalization of the rules for SPACs, the reduction of the free float requirements, but also modernizing the listing rules to allow dual class share structures in the LSE's premium listing segment. Of course, that is not everything. So there is more. And within this, there are many prudential, resale, and wholesale issues that are being taken forward in the UK. They're at various stages in the policymaking cycle. Some reviews, such as Basel III, are in the early stages. Others, such as the overseas fund regime, have already been legislated on. So then, finally, to conclude, what would I like you to remember from today's event? The first point is really that the UK's and the EU's regime are evolving in parallel. The point of departure is the same, and often even the objectives are the same. So we in the city really want to work with our counterparts in the EU and the rest of the world as we try to solve for these challenges, and we really do hope that we can keep the dialogue open. The UK has played a key role in shaping the EU's framework, and there will absolutely not be a radical departure. We will focus, of course, on changes that make sense for the UK market, but we will continue to be guided by changes that will benefit customers and clients, not just in the UK, but really globally. And we want to do that by offering them the best possible products and services and encourage as much competition as we can in the UK. And then finally, just a reminder that we have every interest to remain a globally leading financial center that serves customers and clients around the world. Globally leading financial centers, though, are built on high regulatory standards. And despite what you might read and hear in the media, we are absolutely committed to maintaining our globally leading regulatory and supervisory regime. Thank you very much for your attention.
Well, thank you very much, Kerstin, for this presentation that was certainly a most comprehensive way in the given time frame to present to us what is currently ongoing in the UK in terms of reform. Obviously, many questions would now we would like to ask many questions to you. Time does unfortunately not allow it. We will certainly bilaterally, but I think anybody in the audience can also get in touch with you and discuss with you certain points in particular. We in Luxembourg obviously are very interested in the fund structuring activities and in particular also in the alternative space. So what is cooking there in the UK is of particular interest to us. Then everybody looks at sustainable finance as the future of finance and what is happening there between the UK and the EU in terms of standards and how to avoid market fragmentation. These are issues that are certainly in the minds of everybody. But we will have to keep them for another opportunity and get back to it, because that is exactly what we intend to do with our friends in the UK, continue the dialogue, continue working together and keeping those bridges alive that over the last 50 years and more we have been able to build with you. So with this, Kerstin, thank you very much to you and to your colleagues for all the good work we have been doing together, and to you in particular for this presentation. Ladies and gentlemen, let me now introduce the next panel. I will introduce the moderator and will leave it to him to introduce his two excellent panelists. We will be discussing finding asset management opportunities in both markets. And that is exactly what we have been for the last 5 years looking at doing here from Luxembourg. As you know, Luxembourg is a center of excellence for structuring investment funds that are sold in 73 different markets around the world. Not only in the UK, not only for actors from the UK, but for a global audience or global market. Who better than Jérôme Wigny, a partner at one of Luxembourg's leading law firms, Elvinger Prussen. He's specialized in funds that pursue alternative strategies, but can certainly also discuss with his two panelists the other part of the market. I will now hand over to Jérôme and we'll come back at the end of this program. Thank you very much.
Thank you, Nicolas. Just like you, I will start by saying what this panel is not about. It is not about Brexit gains and losses. It is not about Brexit issues and Brexit solutions. I think we've had enough of all this, a bit like COVID. The idea is therefore to discuss opportunities for both the UK and Luxembourg. We are jurisdictions that are mainly complementary, more than we are competitors. The UK, as you just said, Nicolas, is a major center for asset managers. Luxembourg is mainly a fund jurisdiction, including its ecosystem. Luxembourg funds managed by UK managers represent about 17% of all funds managed out of Luxembourg funds. We're just the UK is second to the US. And therefore the topic of today is how can we cooperate to our mutual benefit. To do that, I indeed have two excellent speakers. The first one is Micaela, here with me in Luxembourg. Micaela has been based in Luxembourg for about 3 years. She is managing director with M&G Luxembourg. And then we have, based in London, Marc Thomas. Marc is a head of UK distribution for Jupiter. So I'll start with you, Micaela, if I may. Maybe can you say a few words about M&G and what you have both in the UK and outside of the UK?
Good morning, Jérôme. Good morning, all, and thank you, Luxembourg for Finance, for this kind invitation. M&G Investments is a global investment manager which is based headquartered in London, and it's part of M&G PLC Group, which is a FTSE 100 listed company. We actively manage a range of alternative, traditional and sustainable investments, and we serve an international clientele which is composed of intermediaries and professional clients internationally. We also have a part of the group which serves UK retail and savings clients. Luxembourg is our European hub, and from Luxembourg we manage and distribute in excess of 98 billion euros in assets, in funds and mandates for our institutional and professional clients. What I think is particular for M&G here in Europe and in Luxembourg is the composition of our book. We have half of the assets in the traditional UCITS space, and the rest is in alternative real assets, private markets type of funds. Our presence in Luxembourg grew very substantially in the last 3 years, and we now have reached around 1/3 of our group investment assets managed here in Europe.
Thank you, Micaela. Marc, maybe could you also tell us about Jupiter? Marc, I think you're on mute. That's much better.
Sorry about that, so I will repeat myself. Thank you, Jérôme, for the introduction, and thank you to everybody listening in. Very simply, the title of this original talk was about building bridges with the UK. I would think from a personal point of view, and from a Jupiter point of view, and also from an asset management point of view in the UK, the bridges are firmly intact, and the tunnel is also fine. So, we believe it continues to be business as usual. Just by way of background in Jupiter, a much younger business than M&G, of course. It is now a FTSE 250 quoted business, but it was established back in 1985 as a specialist investment boutique offering high active and high conviction funds to the UK intermediary market, which represents currently about 12,500 registered intermediaries and over 30,000 contacts, registered individuals. And that's how we established the Jupiter business back in 1985. From 2012 onwards, we started to make, what I would call dropping into 2 European jurisdictions to market a number of funds, which we launched at our first CCAP in 2012. But it became quite clear and not sustainable to obviously fly in and fly out for all the regulatory reasons that we're aware of. And therefore, in 2018, we established Jupiter Asset Management International, based in Luxembourg. And Luxembourg it acts as two things for us. It is certainly a distribution office, but it's also our CCAP management office. We've also since that time opened offices in Spain, Italy, Germany, the Nordics, Switzerland, and we have partnerships in France and Belgium also. So we've got Europe very well covered, and we've now established a full range of CCAP funds within that, mainly traditional, long-only equities, fixed income, and some and some sort of an alternative fund, but very dissimilar, a little bit dissimilar to, not too dissimilar to M&G. In July 2020, we acquired Marion Global Investors. Putting that business together in a pandemic was an experience for all of us. We notified the authorities that we would look to purchase this business, and we did so in July 20 when everybody was working from home. So a great achievement for all concerned. Anyway, they brought with us an onshore UK range, OICs, and also they brought an offshore range, which are in Ireland, the ICVC range. So culminating, I think, in summary, that we now have 70 billion euros under management. 84% of those assets are in mutual funds, so predominantly mutual funds. We have 4 fund platforms, 2 onshore, 2 offshore, with 50 UK registered funds and 45 offshore registered funds. But from our point of view, and I'll reiterate again, we want to continue to grow. UK currently represents 70% of the total assets, but we certainly want to continue to grow. 25% is in Europe, and we want to grow that. And clearly, we do have other offices in Asia Pacific. We established an office in the US, and we're trying to establish an office in Australia. But to us, I think the message I would leave is that it is, for us, it's about business as usual and continue to grow the business throughout Europe. So thank you.
Thank you, Marc. So Micaela, maybe can you tell us in your views what would be the essential elements for a mutually beneficial relationship between the two jurisdictions?
As a UK headquartered firm which have a substantial business in Europe and the EU single market, we think that the business will be able to flourish if 3 key principles are followed. The first one is openness. I think Kerstin mentioned that also in her speech. We believe in cooperation and also in engagement. And I will just make a couple of examples for these 3 principles. So for openness, the nature of investments as a business is global because clients benefit from global access to specialized asset classes and expertise. So in the recent months, the ongoing review of the Alternative Investment Funds Directive has been putting to the test the principle of openness. We believe that the whole AFMD framework and infrastructure has been extremely successful for the EU as well as for the global access from investors' point of view of various investment categories. And so the AFMD framework so far, huge success and worked well, underpinned by delegation in the way that investors can have, again, access to globally distributed capabilities. And the fact that delegation is a parameter and it's a pillar of the infrastructure for the AFMD is something that we see as a nature of the investment business now, is a traditional feature of us as asset managers, and we do not necessarily see it as a EU-UK trade problem. So we welcome the openness and the possibility to keep working on the framework of the AFMD. Of course, if it needs to be tightened for oversight and let's say general governance, that makes sense. But we would say that any deviations of any substantial modifications to the structure of the AFMD would be problematic and create complexity ultimately for EU investors as well as the UK ones. So we wouldn't, of course, suggest it. The second principle is cooperation. I think the main standout topic and points that that we have at the moment in the industry is about sustainable and responsible investing. And this is an area of potential great cooperation for the UK and the EU. I think, again, was mentioned by Nicolas and Kerstin, there has been developments, and of course the European Union has led the rules making regarding sustainable investments. Now the UK is coming out with a plan and rules also for how to set up the agenda, the implementation and delivery of sustainable finance. And all is welcome from our perspective, but we believe and really encourage the fact of a cooperation to find alignment between the rules, because for practitioners, for companies like ours, it's very complex and expensive, and for the sake of it doesn't really make any sense to have to follow in the same topic for the same benefit of investors and final clients different regulations in different jurisdictions. Finally, I wanted to say engagement. Engagement will be absolutely important to continue to foster the business opportunities in the two jurisdictions. Engagement should entail structured and systematic discussions with the ministerial levels, with the government levels, of course with the associations, and where relevant, naturally also involving us in the industry for consultations.
Thank you, Micaela. I think there's no doubt that, at least from a Luxembourg point of view, we're completely aligned. Luxembourg is in favor of those three principles. And as you just said, it would make sense for the industry to continue being open and, in particular, cooperating on harmonizing a number of principles. So, Marc, if I may turn to you now. So you're head of UK distribution, as I said. You have as you mentioned a minute ago, ranges of funds in the UK and on the continent. What are the synergies between the two? And in particular, do you happen to sell UK funds to European investors, or vice versa? Do you sell European funds to UK investors?
Okay, so thank you, Jérôme. So to answer the first question, do we sell our UK funds to European investors? Very rarely, not because we don't want to, but we just don't see the demand, and a lot of our funds are mirrored anyway within the Luxembourg range. But I think more importantly, what we do have in the UK, we do have demand for the CCAV funds. So not only are we selling them our onshore funds, our UK intermediary clients, we are selling also the CCAV range. And I think it comes in three forms. First of all, there's always been the tradition within the wealth management market whereby they will have certain clients who have offshore wrappers that can only therefore then buy offshore funds. So that's been established for a long time now. So that was the hub of how people did business, buying offshore funds. But clearly, as we've developed and our funds have developed, we have a whole series of what we call supermarket platforms, as most of you will know, in the UK. Those are both business-to-business platforms, offering an aggregation of funds on a platform, and also business-to-consumer. There was a resistance up until probably 3 or 4 years ago, whereby these platforms wouldn't add offshore funds onto their platforms. That in the last 3-4 years has transformed. So I think very interesting now is that when we launch funds, we can add, if we're launching a CCAV, we can add it to the platform as long as we can ensure there's demand. And I think that leads to the other question. We have funds, so even though we've mirrored a lot of our funds, both onshore and offshore, the last 4 funds we launched in the last 18 months at Jupiter have all been CCAVs. So we've not launched a mirror onshore fund. They've been CCAVs because there is demand in the UK for those funds, particularly wealth managers. So the high net worth wealth managers. They're not particular in what funds they buy. It's just a case of, is the strategy correct for their clients, and therefore they buy it. So they're unfazed by the CCAV range. And what we do offer, as I say, is some different funds than we do have currently in the UK. So yeah, so I think that to me is the interesting point. So we don't see, and I'll come on to it a little bit later, obviously with regards to the temporary permissions regime, but we don't see, in the UK, we've got 100 funds to sell, whether they're offshore and onshore, to the UK market, and particularly now that these funds are being added to the platforms.
Not only do you have fund ranges both in the UK and in the EU, but you also have sales forces on both sides of the channel. Is it correct to assume that the loss of the marketing passport is not affecting you?
It isn't, quite frankly. I think, as you've probably gathered from my previous comments, it isn't, because obviously my European colleagues, and there's a strong force throughout, as I described, and through the various offices, continue to market the CCAV range of funds to their respective jurisdictions. And for us in the UK, as I mentioned just briefly before, under the FCA, the temporary permissions regime, we've obviously registered all our CCAV funds for this TPR, as it's called, to the UK. So we can continue to sell those funds, as previously described, into the UK market. And I think that's the key. So again, I keep probably repeating myself, but nothing. We're in good shape, and we've got the availability, and from a salesman's point of view, and from a sales point of view, to have that availability to market any of our funds, particularly into the UK, and then obviously offshore. But as I say, these last 5 funds we've launched, as I say, are not available as a UK product, but clients are interested, because let's remember that bottom line is, for clients, if we have a good fund with a good philosophy and process and good track record, well, and a fund that's performing, which offers value, then clients will buy these funds.
Thank you.
Irrespective of their jurisdiction.
Yes, and again, I think your message that it's business as usual is a good one, and at the end of the day, it's also Luxembourg's interest that it be the case. Maybe Micaela, is it? Do you share the same point of view that at the end of the day, the loss of marketing passports has not materially impacted you?
By and large, yes. I think the structure of the business of M&G historically had been pivoted around UK UCITS, which obviously lost their passport with the regulatory changes and the Brexit, of course. And so our big change came in 2018 when we moved across some of our UK-based UCITS here into Luxembourg. But we always had a very deep and wide coverage of the main European markets, and we continue to do that. Now, from Luxembourg, we have 8 branches and subsidiaries in all the main markets in Europe, and this allows us, from a distribution and promotion point of view, to carry on as normal, if you will, but also importantly to be also close to our assets. We have a big business in real estate, which demands proximity as well to the assets we have in Europe. So the fact of having both hubs, if you will, and Luxembourg as the EU hub with its branches and subsidiaries cater for a good functioning of the business, so no real problems anymore.
But maybe on that last point, indeed, having 2 hubs, as you just said, one in the UK, one in the EU, probably also means that you have the need to harmonize those 2 hubs. How much of an effort is that, and is that really a goal in itself, and for what type of matters? For example, for ESG or for the UK value to investors principles? Yes. The way we are structured is with a global product management and product development team, which is centralized, and so a certain degree of harmonization is always welcome for efficiencies, but also for leveraging on the know-how of the colleagues in products and in structuring and so on. I think what has developed a lot in the last few years has been a decentralized presence also for our
product management, product development, so that again we can be closer to the clients, to the investors, we can be closer to the assets, and we have similar to what Marc explained for Jupiter, 2 ranges, and they have to be, of course, taken care in their own jurisdictions, in their own rules. But when we think about investment categories and investment strategies, we try to have a good concept for an investor to be willing to put money into the fund or the mandate with us, and then think about the product declination as it's needed in the various markets. I think one of the main points in the policy agenda that is in our mind right now is especially what you mentioned about the sustainability and the ESG sphere, because the development of the UK rulebook for the sustainable finance and the green taxonomy of the UK, which is coming, is or could be potentially differing very much from what's happened already and established already in the EU. So for us, the differences in itself, for the sake of it, would not be welcome, because it would prevent an efficient mechanism, but especially comparability for the benefit of the investors.
Marc, what is your point of view on this?
Yeah, so, agree with a lot of what Micaela had to say. So we certainly have harmonisation, I think, as I've already previously explained, both for our onshore and offshore range. We also have a centralised product team here in London who are talking to, obviously the European team, the Asia Pacific team, and trying to develop product. As I say, what I think is interesting is that, and I probably didn't envisage this on joining Jupiter, that we would probably lead with launching CCAVs as opposed to trying to launch a CCAV and a OIC or unit trust at the same time. I think the only time we'll do that is if we've got a product that we believe is clearly purely just for the UK market and for what I call the mass market. So that's going very deep into the retail space. Well, clearly it's not going to be appropriate. So that's the only time when we probably launch two initiatives. And I think the ESG content of this has proved very, very interesting. Obviously, since the SFDR implemented, the EU regulation on SFDR was implemented in March last year, we've taken quite a pragmatic and careful approach. Having said that, we have, we moved everything to Article 6, and then clearly any sustainable funds that we had have been marked as 8 or 9. We just this year launched a dynamic bond fund, ESG 8, and we've also launched a global ecology bond, which is Article 9. The reason I mention that, there is genuine interest in the UK, so we are speaking to our UK clients. We also have a joint venture in the US where they manage money out of Denver. I must say all our managers are based in the UK, apart from this joint venture in the US. But we've also launched a CCAV for that business in the US. That, again, they're coming over into the UK next week and representing this CCAV to the clients. So a lot of harmonisation, as I say, only at the granular level where we may offer funds in the UK that are then different. But coming back to ESG, what we found very beneficial is that because we're taking this pragmatic view, we've already now included a number of our European equity funds, our emerging market debt funds, our global emerging market equity fund as ESG 8. So we are transitioning funds, but we're taking a pragmatic view and taking it slowly, ensuring that ESG is embedded in the process of the fund managers and what we do. But what that leads to is in the UK, and this is a bit of where we can benefit from that early regulation, and I agree with Micaela. I just hope that the SDR, the UK FCA consulting paper, doesn't differ massively, because that then could cause issues. But what it's helped us is that, for example, when we're talking to clients about our European fund, our onshore European fund, what we know is that it's an Article 8 fund. The equivalent fund in Luxembourg is an Article 8 fund. So what it does, we can already talk about what we're doing about ESG, the way we invest, how it's embedded, and that's helping us differentiate ourselves. Certainly, global emerging market equity, where we've got the same. So as we can talk to our clients in the UK, even though we've not got the regulation yet, but saying, We've adopted it for these funds in Luxembourg, and we're sort of trying to differentiate ourselves, and I think that's proving to be very, very useful. So I'm delighted that the EU regulation came first, and that's certainly helping us differentiate ourselves. But other than that, I know I've repeated myself and I continue to do it. It is definitely business as usual. That's what it feels like to me, and I'm sure my colleagues who I speak to regularly throughout Europe, we have regular meetings. In fact, we've got a global sales conference, which is all the salespeople coming together, over 150 people in the UK in April. So we're regularly speaking and understanding trends as well. I think that's the other thing I've not pointed out is what is trending in Europe, what is trending in Asia.
We still hear you.
Okay, sorry, everything's gone blank at this end. I can't, the screen's gone blank. So as long as you can hear me, it was just to say that, we look forward to the future and continue to grow the Luxembourg platform and the business.
Great. We only have 3 minutes left, and I have a last question for both of you, which is about the shortage of talent. As we can read in the press, the shortage in financial services seems to be worldwide, especially in London and Luxembourg. The fact of having 2 hubs, does that in a way compensate the shortage of talent? For example, because you can use the resources that are in Luxembourg, or vice versa, use the resources that are in London in certain areas, Micaela?
Yes, Jérôme, I can confirm that talent shortage is an issue not only here in Luxembourg, across Europe, and especially in some specialized areas, senior sales, ESG and sustainability, investment product specialists, compliance, risk. I mean, I could go on with a long list of talent and skills that companies like ours need, and they have been more scarce in the recent past. The fact of possibly we're allowed using investment specializations that are in one hub or in another is definitely a mitigation, as it is the fact of trying to bring in young talent and form the talent, so give a platform for younger colleagues to learn from the more senior and established professionals we have in the group, and make it as an attraction point to come in and also learn about investments and be growing with us as well.
You live in Luxembourg. You're not unhappy in Luxembourg? You confirm that we should be able to attract more talent?
I absolutely confirm. Luxembourg is lovely. It's got a wonderful lifestyle. The network and the environment for Luxembourg is made for people who love asset management and investment management. So I'd encourage anyone who wants to grow his or her career in investment management to join here in Luxembourg.
Thank you. I think this is a good conclusion. We might have lost Marc. But thank you to both of you, Micaela, Marc, for having done this. Thank you. Have a good day.
Thank you.
Good morning. It's my pleasure to welcome you to the panel discussion this morning dedicated to the insurance market and the insurance activity of Luxembourg insurers in the UK. It's my pleasure to welcome this morning my colleague Albert Florent. Albert Florent is the Managing Director Europe and Group CFO of Lombard International Group. Lombard International Group is specialized in life insurance solutions, mainly for high net worth individual, and as such it has activities throughout Europe and of course also in the UK. And this has been the case for many years. So Brexit, the decision was taken on Luxembourg National Day 2016 and became effective from 1st of January 2021. So what happened in between, it's shown on the slides from the perspective of the Luxembourg life insurers. So Luxembourg life insurers have clients in the UK, and the slide you see here is about the written premiums for UK residents. So people living in the UK and people that have an life insurance contract with a Luxembourg-based insurer. So you see that it's roughly €500 million euros that are collected in the UK in 2016, the year of the Brexit decision. And these premiums are mainly one-off or single premiums for sophisticated life insurance contracts. So I would like to comment one figure that's between 2016 and 2017, there has not been a decrease because of the uncertainty, what would happen after Brexit, or how the financial services could continue to be offered to UK residents. We see here a triple figure that has been collected in the UK market, coming back to a more normal rhythm for 2018, 19 and 20. So these figures stand for all the Luxembourg life insurers active on the UK market, but today we will have the insight of Albert, Florent, so the Lombard group, who has also been between those that are active, as I said, on the UK market. So Brexit was not a deal breaker, if I may say it like this, but I assume, Florent, that continuing working for UK-based clients was a challenge, because obviously the regulatory landscape changed, and at the latest at 1st of January 2021. So it was not a deal breaker, but how the organization changed, was it complicated, and to what extent?
Hello, Marc. Thanks for the invitation. It's great to be here. As you say, Brexit was a change. It was a big change, and it was definitely something that created a different landscape for the insurance industry at large. Many of the players based in the EU lost passporting rights into the UK as a result of Brexit. And therefore, many decisions had to be made. And some players decided to remove themselves from the market, and some decided to stay. We took the decision to stay. It's an important market. We'll talk about it. You've shown some really interesting premium figures there. And as a result, at Lombard International, we created a distribution entity called LWA, based in the UK, which is FCA regulated, so which can distribute and provide advice to end client based in the UK. This was a long-term initiative. I mean, we kicked it off in 2019. We wanted a solution that was hard Brexit-proof, if I can use the term. And it proved to be the right decision, given where Brexit landed in the end. It took us about 12 months to set up the structure and to get appropriate approval. And today, we can continue to operate within the UK. We have the benefit of what's called the financial promotion regime as well, which is made available to overseas long-term insurers. We have a registration in Jersey, which allows us to gain access to the UK. So it's a little bit more constrained than it was. It has forced many players to make key decisions around the market, and we've decided to stay. We've had a very successful year in 2021 in the UK, so we're happy that this decision has played out favorably so far.
So if I understand well, the UK has been and still is a very important market for the Lombard Group, and it was well worth the efforts, if I may say so, to comply to the new legal and regulatory environment.
Yeah, clearly it's a top 3 market for us, and has been a top 5 market for the last few years. Interestingly, and some of that was mentioned on the asset management and the fund industry earlier, this is a sophisticated market. This is a large market, with a long history and a lot of maturity. Clearly, if you zoom in on the life insurance space, a lot of the life insurance space in the UK has been taken up by what's called offshore bonds, which are essentially marketed out of jurisdictions such as the Isle of Man historically. It's a market which is, or it's a segment which is a little bit more retail-ish or upper affluent with some level of standardization, and as a result, from a pricing perspective, it's difficult for Luxembourg-based insurers to really get operating leverage and the right level of profitability out of that. And therefore, if we think about where we can play in the UK, it's really more on tailor-made solutions, on specific segments that I'm sure we'll talk about, which are more prone to the type of products that we sell, and that can generate enough leverage for this to be an interesting business for Luxembourg.
Okay, thank you, Florent. When we remember the decision that had been taken in 2016, there was a period of an uncertain period of uncertainty and not knowing how it would end up, and with a deal, without a deal, with financial services included or not. So you were talking about preparing for a hard Brexit, but how did the clients themselves react to that uncertainty, given the new decision and the new landscapes that would be created by that decision?
Yeah, just like everywhere else, throughout that quite lengthy decision-making process, there was a lot of uncertainty and there was a lot of concern, and our clients were no stranger to that. However, life insurance is a long-term segment, and we have not seen any redemption or any lapsation. The book was very stable. At Lombard International, that book of business is several billion euros, 6 to 7 billion euros, so it's not insignificant to us at all. So we have seen some concern, but we have not seen any redemption or any pullback. And that's quite important. And in that context, I think our ability to continue to steer the ship and to say that we will be there and we are working on solutions to continue to operate within this market was quite critical to our clients.
Okay, so the confidence was not broken by this decision, and clients seem to still like the similar products that you have been offering under another regime, but still to the same clients. So are there any evolutions which you observe between the expectancy of clients after the Brexit, or even compared to other markets?
Well, I think if we if we think about what types of products or what types of segments are interesting to us, back to my point on offshore bond being more standardized, there are really two segments of the population that we focus on. It's the resident non-domiciled in the UK, and this is a large population. And there's a segment which relates to UK residents that are planning an international mobility, and we know this is a very mobile workforce as well. The market is also, back to what I said earlier, very wealthy in terms of high and ultra high net worth individuals. So that's a segment we play in. And if you step back from Brexit, you look at just the macro trends on wealth in the world, there is just growing wealth in the world, and that includes the UK. So there's a natural market within this segment which increases. On the backdrop of more complex regulation, that makes the need for long-term insurance solutions and wealth planning solutions even more prevalent than before. So that natural segment of market that we're seeing remains the same and remains one that is growing, and then one that we can capture at reasonably good levels of quality in terms of clients and in terms of amounts. In terms of expectations, I would say there's a general acceleration of service expectations. Insurance or life insurance in general has been seen as less dynamic than the banking space, for instance, when it comes to digital services or when it comes to managing investments. And we're seeing a bit of a convergence, so we're not talking about divergence here, but convergence to a degree when it comes to expectations from end clients regarding servicing capabilities, speed of service, the ability to access information in a seamless fashion. From a back book servicing standpoint, as far as we're concerned, the book continues to be served in Luxembourg. That's where we have all of our operations today. That's where we intend to stay. And therefore, that servicing capability has not changed. We're just continuing to upgrade it to meet ever-increasing customer expectations.
Okay, and these customer expectations, do you see any evolution which might be different to the evolution of the European markets where Lombard is active on, like the French or Italy?
Well, we're not seeing yet any major difference, but of course, as the regimes maybe tend to diverge between the UK and the rest of the EU or the EU, there may be some difference that will be dependent upon changes in regulation or legislation. At the moment, we still continue to treat the UK and our client base in the UK very much as the rest of our book.
Okay, thank you. And perhaps from your personal perspective as the CRO for the European operations, how would you try to forecast the evolution of the UK market for your company?
Well, I mean, it is hard to predict, and I think the figures that you've shown at the beginning of this section are interesting. We can see some volatility. It's a $500 million to $1.5 billion market a year today in terms of new business premium. I anticipate that we'll stay within that range. As I said earlier, we had a very good year in 2021, and we're very comfortable that 2022 has started very well. So I think there's a solid backbone of production which will remain. But I'd like to maybe expand a little bit on your question, because there's a wider theme around how do we move past Brexit in terms of financial promotion regime or in terms of access to the UK market for non-UK or non-overseas long-term insurer players. Today, a lot of the EU is cut off from the UK when it comes to promoting new business, and I believe that there's a lot of interests that are similar between Luxembourg and the UK when it comes to financial services, to funds, to asset management. So there are more bridges that need to be built. It's the theme of today, and I'm really happy to be part of that, because I believe that there are much stronger ties that can be created post-Brexit between Luxembourg and the UK. dealing with some of the regulatory changes that are necessary to allow Luxembourg to be more present in the UK will be quite important. And I think that could be a strong catalyst for an increased volume business to be produced over the next few years. So I remain quite bullish on the as-is situation. I believe that we can do a lot more to make the UK and an even more attractive place for Luxembourg insurers to play in.
Okay, thank you, Florent, for this insight. So if I may take a conclusion out of our discussion, the bridges are still there, but perhaps the access to go over the bridge might be a little bit different, but the bridge is still very much frequented from both sides of the entrance of the bridge.
There's still a bit of traffic, but hopefully we can clear it off.
Okay. Thank you, Florent, for your insights. Thanks to our friends in the UK and elsewhere who are with us this morning. And I will now conclude this discussion about the insurance business. And it is now my pleasure to introduce the next panel discussion, which is about the future of the European payments landscape, and with my colleagues Thibault de Barsy and Marion King. Thank you very much and have a good day. Bye-bye.
Good morning. My name is Thibault de Barsy. I'm the Vice Chairman of the Payments Association EU, based in Luxembourg. And today we'll have a great conversation about the future of payments in Europe with Marion King. Good morning, Marion.
Good morning, Thibault.
Marion, you are head of payments at the famous bank NatWest, but most importantly for me, you are the chair of the advisory board of the Payments Association in London, our sister association. So I think we are a perfect example of a bridge between the UK and the EU, and that's why we have this conversation today. Now, about payments, I mean, our industry is just fantastic, so many things happening. But today we have selected 4 topics which we think will be the driver of or points of attention for the future of payments in Europe. And I think you would agree that the 2 most important ones are how is open banking going to evolve, both in the UK and in the EU, and then we'll switch to instant payments, which are the 2 main driving forces. And what's interesting, of course, is that the UK was very much in advance on those 2 topics versus the rest of the EU. So you are in a prime position to tell us what is the current situation in the UK, and then I will reflect with what was happening in the EU. But maybe let's start with open banking, Marion. I know there has been a lot of discussions, review, Khalifa review, etc. Regulators want to know what's happening. Tell us more.
So open banking, I think, Thibault, has been a catalyst for change in the UK. And I'm passionate that it's really that change within that regulated framework and with that collaboration across all of the major players that will get growth and innovation in the payments industry. And I think the experience in the UK has been it takes time. You know, we've heard the naysayers, this will never work, but it does take time. And I think what we're seeing now is that real growth taking off. We had 26.6 million payments made by the end of last year, and 4 days ago, the numbers were 5 million regular open banking users. And we're seeing about 1 million going on every 6 months. So we're now starting to see the use and the realization of the advantages and the benefits of open banking really taken off. And Her Majesty's government, HMRC, allowed open banking for the collection and remittance of payments, and they've now transacted over 2.5 billion. So there's no doubt that this is here to stay, and there's no doubt that this is a real driver for change. We've seen that in Australia with MPP, with a mandated payment service to enable third parties to access customers' information and accounts with their permission. And I think what it's doing in the banking sector is making us really stop and think about models, business models, revenue models. Think about those traditional profit lines for banks, such as overdrafts. Well, with open banking, fintechs can provide capability for your accounts to be scanned and for an automatic shift of money to avoid you going overdraft in any particular account. So in essence, and in theory, could remove that revenue line for banks. And so that's really driving change and benefit to consumers, which I think is great.
And I mean, on the European side, as you might know, PSD2 is about to get reviewed, and this effort will be led by the European Banking Authority in cooperation with the European Commission. So yeah, there's a lot, obviously a lot of new players are not entirely happy about the way it has been implemented. We have issue, of course, in terms of API standardization. Of course, at the scale of the UK, maybe it's more easy to have a better standardization. But here, of course, we have different approaches in different countries with strong players that emerge, that position themselves as open banking platform. But yeah, the situation is not completely satisfactory. I guess you experienced the same, right?
Yeah, and clearly it's a lot harder to do, cross countries with different standards, different approaches, and different views on how this should work. But what's driven it for the UK, I think, was, the Competition and Markets Authority mandating that this had to be done with the larger banks within a framework which we all agreed on to get that API standardization. And not just standardization, but the quality of the APIs to make sure they function in the way that we anticipated, and lots of testing between partners as well, or parties. So you have to have a framework, whether it's for one country or for multiple countries. But clearly, the more stakeholders you have, the more challenging it becomes. And we've probably seen that with what's happening with EPI. It is difficult to bring multiple parties together. So that framework is important. But if I reflect, Thibault, I think also what was challenging for the UK is I think not enough thought or time or investment was made on the end use case. What does this mean to our customers? How might they use it? Bring it to life, such as the example I've just given. And then perhaps some sort of joint marketing, not selling product, but really promoting the advantages and the benefits of what this can mean for customers.
Talking about end users, another big topic which is dear to the heart of the consumers, and obviously now the European Commission, it's instant payments. We have a common standard. Instant payment is offered throughout Europe, but according to very different access conditions, actually, at different prices. And we know that our Commissioner, Mairead McGuinness, is not happy at all about that. So she's probably preparing some piece of legislation so that we have a common framework on instant payments. Now, here again, I mean, the UK was pretty much ahead in terms of getting it available for everyone. So what's the situation now? Is it everywhere? Is it free? How does it work?
Yeah, so Faster Payments was launched in the UK because I was running Vocalink when it was launched, so I remember the day well, in 2008. So we're now talking 14 years ago. And I think it would be true to say that the UK economy, UK consumers of payments can't imagine life without being able to move money in real time. Yeah. It just has so many benefits that it's a very important thing to drive. That being said, 14 years on, we're now looking at the next generation of real-time payments with a renewed payments architecture for faster payments, in parallel with a renewed architecture for real-time gross settlement, and looking at the liquidity management between in real time, because this brings huge advantages. But so very successful, widely used, essential to the economy is how it is now viewed. However, and I take this quite personally because I launched the product.
That's why you're here.
What we saw 10 years after launch was scamming, convincing end users to move their money in real time to a fraudulent account for a fraudulent purpose.
Yes.
And of course, it's what we call an irrevocable payment. It's gone. And so the recovery of that is incredibly difficult. And it's been a huge issue in the UK. And we're not shying away from it, but we need to do better. And we need to make sure that within that architecture and within the design of the scheme, we really sharpen our focus on protecting end customers, to think and put in the technical changes that we can make to protect customers from this fraudulent activity. And it's difficult because the bank isn't involved at the time that the fraud is committed. It's only the execution of the payment that we can try and pick it up, such as we've done with confirmation of payee. So a big learning, I think, for other countries that are moving in that direction is, learn from the challenges that we've experienced in the UK.
One other underlying aspect, and it's mixing both actually open banking and instant payments, is how liquidity should be improved for companies, for banks, for payment operators. And it's not only about technology, it's also about the requirements that are imposed by the central banks, by the different parties, part of our system. I know it's a topic that is dear to your heart.
Yeah, it's complicated, but global liquidity is really about ease of access to finance. And you spoke a little bit about putting a pricing framework across Europe because you have differences between the countries. And I think that's really important. And whilst consumer banking is free in the UK, so to end consumers in retail banking, a faster payment is free. What I think we spent not enough of time on is the economics of this. How is this sustainable?
Yes.
Large technical infrastructures need funding and they need financing. And if you have free services, that becomes quite challenging.
Absolutely.
And the risk is that you shortchange or underinvest in our ecosystem. So I think it's absolutely right that the economics of the model are there right up front in that design, not just a mandatory requirement to build something. You have to think through how the economics flow. And so if you think about all the different schemes we have, and I think of them as silos, with liquidity management being managed in each one, well, if you step back and look at that at a holistic level and think about it cross-border as well,
yes.
And the efficiencies that you could create through real-time management, real-time insights, which can assist with monetary policy and other things, you start to save money. And so the economics isn't just what you can or can't charge, it's how do you drive efficiencies in that ecosystem. And for me, liquidity management is a key area where we can do so much better and sort of release some value in the value chain of managing money flows. Absolutely,
completely agree with you on that. One particular aspect before we move on to our last subject, which is going to be CBDC, is the SEPA access. Now, of course, as a result of Brexit, are there worries really, Marion, about that access to SEPA system from the UK banks?
Yeah, I don't think they're urgent worries. I think what we have to watch, though, is the passage of time. There's no doubt that SEPA has brought substantial benefits for Europe and including the UK. And, we transact about €1 trillion between the UK and the EU. So this is really huge money flows. And that access is an ease of access, and that consistency is a key conduit for trade. And that will apply, that applies in a post-Brexit world more than before, probably. But I think that what we need to watch over time is the inevitable changes that will happen. And we have to ensure that parity of functionality is constantly aligned. So if there are changes to the SEPA geographical scope, the SEPA approach, the SEPA rules, we have to make sure that the UK is on board with that and we make the changes and stay with it. Because what I've seen through my sort of long experience now in the payments industry is things can erode after time, and then the ease of flow and consistency for customers starts to break down. So I think the worry is that we don't keep that alignment and we don't have a framework to ensure that happens. And if we look at PSD2 and if we look at GDPR, European frameworks from which the UK has benefited hugely in terms of that consistency of standard and that drive for implementation.
Absolutely. Now, our last topic, which is a fantastic subject matter, is of course CBDC. So as you know, the European Central Bank, they have their digital euro project. It's a project. It's not an official decision to launch it. There are many questions about it. How will the digital euro will be distributed? What will be the role of the banks? Will it be accessible to non-banks, to the other payment operators? Will there be a cap on the amount of digital euro that European citizens will possess? There was an amount mentioned of 3,000 euros. So what can you do with 3,000 euros? Anyway, I heard that in the UK there was a quite negative paper coming from the Parliament, if I'm not wrong. And on the other hand, there is a fantastic new initiative just launched by the Payments Association. Tell us more, Marion.
Yeah, so this is a great subject. Personally, my personal view is digital currencies are going to really take off, and we're going to see that growth think of digital currency alongside open banking, alongside global frameworks, and you start to see seismic shift in the flow of money and transactions around the globe, which I think is really positive because there are real benefits, but of course, big risks too. And I think the biggest risks are, cybercrime. This is all over the web, so this is open potentially to crime, as with all transactions. We need to be really careful of that. And then the other, of course, is privacy and ensuring that data isn't taken or misused in any inappropriate way. Easy to say, really difficult to do. So the Bank of England is in consultation right now.
Right.
So no decision has been firmly made. But I think it's fair to say that the industry can see the benefits. I think the House of Lords view from Parliament was, is this, a solution that doesn't have a problem? What is it we're trying to do here? And I think that's fair.
Okay.
Because this is early days. This is difficult to get your head around and to really think through in terms of all of these changes at the same time. But there's no doubt that having coded currency can help us, in my mind, to stop fraud, to track money, to take the complication, cost and inefficiencies for customers in terms of reconciling payments and invoices. Really honing in on that fraudster. You can see opportunities for central government with tax receipts because money will be less able to be hidden in terms of offshore or other places. So you can see some phenomenal business cases, use cases where a digital currency can make such a big difference. But it takes time. It takes real understanding what it means for end consumers.
Marion, we are running out of time. Just a word of conclusion. On my side, definitely the EU market is just booming, especially as in Europe, we still have countries where the use of cash is still predominant. So there is a huge market to be taken there in terms of digitization of payments in general. And of course, we have those fantastic tools which are PSD2 and maybe one day PSD3 and the generalization of instant payments. So we have those bricks to build the future. So maybe one last word about the next step for the UK.
Well, for me, I think it's just about collaboration. The more we talk, the more we can develop things such as the era for new retail digital currency we spoke about in the UK. So it's collaboration, a framework, the standards and regulatory involvement is essential. Economics of our payment systems and really understanding the ecosystem. And then the three things we need to watch out for are illicit use and fraud. Inclusion, there's a real opportunity here to drive inclusion at every level, and resilience. Technology is changing and it's bringing efficiency and cost savings. So getting that resilience in our payment systems, which is critical.
Great. Thank you so much for your time, Marion, which I know is very precious. Thank you so much. And now I'm heading back to Nicolas Mackel, who will conclude this session. Thank you very much.
Thank you very much, Marion and Thibault, for giving us this sneak preview into the future of the European payment industry. With this, ladies and gentlemen, we are coming to the end of today's program. I hope that you will agree with me that, first of all, I think there is a large appetite from speakers and as representatives of the industry from a larger audience to continue building bridges and continue enhancing those bridges that we have. We certainly here in Luxembourg are ready for this. If I may use the words of one of the speakers, Micaela, who reminded us, and echoing there also the words used by other speakers, in particular Kerstin, that it is openness, cooperation, and engagement that is needed in order to bring us forward in this and help the industry really seize the opportunities that both markets now offer. Ladies and gentlemen, it remains for me to first of all thank all our speakers and moderators for not only taking the time out of their busy schedules, but for sharing their expertise with you, the audience, on this issue. I would also like to repeat my thanks to our sponsors for supporting us in this endeavor. And I would like to invite you all to join us for our next events. On March 16th and 17th, at least for our Francophone audience, we are organizing our third edition of a conference together with L'Opinion, a leading French media, on different issues ranging from economics to digitalization, sustainable finance, and geopolitics as well. And then on the 27th of April, we are building bridges again, this time with Brazil. So if you're interested, you will find more information on our website, luxembourgforfinance.com. And I wish you all a very nice day and hope that you will be able to stay safe. Thank you very much.